Good morning, everyone. Thank you for waking up so early and coming to the first sessions, which is a surprise to see so many people here after last night. Just going to remind you that if last night you thought it was epic, today it's going to be even more epic, is there such a word. We booked some VIP tickets for a live performance at Reduta Jazz Club, which is the longest still going jazz club in the world. There will be playing the Metropolitan Jazz Band, will be playing Louis Armstrong, Gershwin and stuff like that, so be there. Snacks, food is also available. Make sure to be there at 7 o'clock and show your bracelets, otherwise they won't let you in. All right, and breaking news from this morning. We were 14 people outside and we ran almost 7 kilometers. A great story. Jaka here is the person that inspired us in 2019 to start running. So thank you so much. Right, here's a photo. So it's not just in front of the hotel, we actually went down there. And here's the video to prove it, that we came back. Yes, this was the pace we ran the whole 7 kilometers with. All right. So the first session today is about the navigating the future, and we have a great moderator, actually a best-selling author coming up right now, Victoria Soltes, who is going to moderate this session. Victoria, the floor is yours.
Well, thank you very much for everyone. Thank you, of course, Zoltán, and thank you for everyone who woke up to see us today when we are going to discuss a lot of interesting topics within 50 minutes. So I invite my panelists on the stage. We can start with the ladies, Anna Agu, Merit Leib, and Jaka Repanšek, okay. And my name is Victoria Soltes, and as Zoltán said that I indeed wrote a book about banking and payment, and I'm the founder of PSP Angels, which is a payment consultancy company helping people understanding how banks think and optimize their payments. Today we are going to talk about a lot of interesting topics. We are going around fintech in more details. I'm representing the payment part and the banking. Anna here is having her own law office. Merit is an expert in compliance, and Jaka here is the marketing and advertising guru, if we can say that. So I allow my panelists to introduce themselves in a short way, and before the panel, we discussed that my panelists collected some really interesting case studies today as well, what we're going to present to you. We are not only going around fintech, but we are going to touch a bit of the compliance, regulatory challenges for even cryptocurrencies, which Anna is an absolute expert on. So I think we're going to learn a lot today. So go ahead, Anna. Tell us who you are.
Hello, good morning. I'm glad to see a lot of you here, second day. The bravers are early in the morning here. And it seems to be like a very good tradition to start with the first panel where there is a lot of beautiful women. So I'm glad that we have diversity and have a chance to share our knowledge. So shortly about myself, my name is Anna Agu. I'm managing partner and co-founder at Lex Law Office. We are a law firm working with international clients since 2017, mainly from the fintech, crypto, IT, and iGaming space. Also, I'm a public speaker, co-organizer of fintech conference, and ex-member of the blockchain working group, which was working on the MiCA regulation and other related regulations with the virtual assets. Thank you.
Hi, nice to see you everyone. Good morning. My name is Merit. I have been in finance about 20 years and in compliance, regulatory compliance 15 years, specialized anti-money laundering, counter-terrorist financing. I have been also active in payment institutions, also VASP, virtual asset service providers, responsible for compliance. And today I am expert for auditors regarding how to evaluate virtual asset service providers. Thank you.
Hello, my name is Jaka. According to the DSA, which I'll talk about a little bit later on, the Digital Services Act, I must make a correction of the information we heard before about running. Yes, I did initiate this 5 years ago. However, I could not keep the pace with the rest of the group today, so I was the last one. And so, you know, in order to be, according to DSA, this is the truth about the running this morning. But anyway, I'm a lawyer from Ljubljana, Slovenia. I'm currently the president of our advertising tribunal, which is an interesting institution. It's a self-regulatory one. So there's an association of media and advertisers and agencies who established an organization which then established a court. And this court was given power also by the state to be the sole body in Slovenia to decide on the eventual unlawfulness or unethical advertising in all channels, including, and for all products, including gaming. So if we decide in our tribunal that an advertisement, for example, must be removed, it must be removed within 24 hours. So that gives us a lot of power, but also a lot of responsibility, and a lot of, which I'll talk a little bit later on, a lot of following what's happening right now on the European stage. So this is not so much of a national debate anymore. This is a Brussels debate. The so-called European Digital Decade, which we will touch, I'm sure about that, is going to influence not only the 27 member states from where most of us come, but also globally, like GDPR, because it's our ambition of the EU to become a global regulator when it comes to issues like content, moderation, advertising, et cetera, so the whole digital package. So briefly, this is it from my side. Please hand on the word to you.
Yes, and it feels like that our industry is being squeezed from every angle, obviously from the legal regulatory requirements, as well as the banking and the compliance and the advertisement. Guys, how did we end up here, and why do you think that all of these regulatory restrictions, banking restrictions, advertisement restrictions are really hitting our industry? What happened at the past, and what is the reason why we are here, and why is it needed, in your opinion?
I can do a kickoff. The main reason, or one of the main reason, according to my opinion, is consumer protection, which is like the basic level for all upcoming changes in the regulation. If we are like talking about the specific regulations, for example, in terms of the compliance and IML directive, we have those amendments according to the, let's say, bad scenarios that we have seen in the past. We are seeing a lot of bankruptcy procedures related to the obligated entities related with the money laundering. We are seeing a lot of not proper due diligence measures in terms of the particular obligated entities, if it is a crowdfunding, if it is a, I don't know, crypto project, if it is a fintech company, it can be e-money institution, payment institution, etc., etc. So the basic is the bad experience in the past, and layer one or fundamental principle is the consumer protection. And if you will have a look on the preamble of each regulation or directive, there is always a note that consumer protection to prevent the potential harm for the consumers, we need to amend particular articles. And the second is harmonization. This is also like one of the principles within the European Union. We should have harmonization between the countries. And sometimes if we are, for example, talking about the MiCA regulation, I believe we can dive into this later on. MiCA is upcoming regulation for the crypto markets. So the aim of this regulation was to have one fundamental regulation, one framework within the European Union to regulate virtual assets, virtual service providers, because this approach was different by countries. So, for example, what we have for now until MiCA is in place, if for example, crypto processing companies getting the license from one country, they are fulfilling the obligations according to the national law. They would like to provide their services in the other countries. Basically, no crypto companies are doing the project for the one particular country and one particular country consumers. They are basically like worldwide, or until they have like some particular markets, for example, Europe, Asia, etc. So if you're regulated in one country but would like to provide in another country also the services, you need to get authorization also there. You need to comply with the local rules, and they can be different. And this is the challenge for the market participants. So this was the aim of idea of the harmonization, the framework, the rules for the market participants within the European Union.
Got you. Guys, join in, please, because there are a lot of things on the table to discuss.
I will just shortly also mention that where we are and why we are here today, so many amendments of legislation and so on. I will say it's also lessons learned. So, for example, if something has happened, like money laundering schemes or something like that, which our governmental purpose is also financial stability. So I will point that out as well.
I think I would back everything you said. That's why we're here. There's a few things maybe just to add, because we're in the digital world. So it's the European digital decade. It's the green and the digital transition, which is number one agenda for this commission and the next one. It's coming from directives to regulation. It's coming from national legislation, especially in gaming or advertising, in consumer protection, to unified European single digital market. That's what we're talking about. And it's going to affect, again, all 27. Plus, it's going to affect whoever is offering services from abroad, from Curaçao licenses, from Gibraltar, from Colombia, from anywhere around the world, offering services to European players, consumers, will be of course, bound by the regulation, just like GDPR is doing already for the last 6 years. And please remember what the new legislation, the regulation in the European Union now says. Ursula von der Leyen said that many times in the beginning. She said our aim is that everything that's illegal offline is now illegal online. So there's no more difference between offline and online. Whatever is illegal offline is now illegal online. And just to be very European now, even though I grew up in New York, I consider myself to be an absolute pro-European guy. I'll tell you one thing. We were lacking behind US for 20 years now. There's only one European company, I mentioned that yesterday, among 15 biggest world digital companies. And we need to somehow close that gap of 20 years. And European Commission is doing that through the regulation. I personally believe that's not enough. This regulation will have to be competitive also. It's just like regulating the cars now. You know, the Chinese cars are great. Electric cars are flooding the European market. I just read an article yesterday that probably Volkswagen, Audi, and BMW are going to be out of business in about 5-10 years because they're simply too expensive in comparison to the Chinese electric cars. And you cannot only regulate those things, you need to actually be competitive. So, but that's another point maybe we'll touch later on, but that's why we are here today.
But don't you think that obviously the regulation many times is killing the industry when we see that the entry barrier is getting higher and higher, more and more expensive for new players to come in? So obviously monopoly situation turns up. The biggest companies are working with the regulators to twist and turn things on their way. And what we see here, and this is what I hear a lot from obviously banking and payment and fintech perspective, that America is lacking on a lot of regulation, and this allows the innovation. However, Europe is just curbing all the innovation initiatives because of the over-regulation. What do you think about that, guys? Please, yes.
Okay, that's a common thing. Do you remember GDPR when it came out 6 years ago? It was like, oh no, Europeans were going to kill the competition with GDPR. Well, did that really happen? I don't think so. I don't really think that happened. And with the AI Act now, you know, AI Act's coming out very, very shortly. Artificial Intelligence Act, the first comprehensive regulation in the world, regulating the dangers of the AI systems to our society, and it's going to affect you guys using chatbots in your services. They're going to have to comply with not only the copyright issues, that's a different thing, but they're going to have to ethically comply with the AI Act. Should we say, let's not do AI Act because Chinese are not doing it and Americans are not doing it? Well, it's not true. Biden administration just recently passed their own version of an AI regulation. It's not as comprehensive as the European is, but everybody's thinking about almost everybody in the world is thinking about the dangers of AI from the ethical and legal perspective. I personally believe that over-regulation, of course, can be harmful short-term to many of our industries and products and services. But long-term, we're human beings. We're people who have senses and we have ethics. And we need to understand that long-term, our industry can only survive if it's going to be ethical and compliant with basic rules of humanity, of society. That goes for gaming, that goes for advertising, that goes for products that are intended for children, that goes for food and beverages and beer and alcohol. Remember, just for the last point, tobacco and alcohol. Tobacco was heavily advertised 20 years ago. You could smoke on planes. Today it's unthinkable that you can advertise tobacco. Alcohol, it can barely be advertised these days. That's why everybody's advertising the 0.0 beers now, and that's a trick that the industry is doing. So I'm sure we're going to find tricks like that also in the online gaming industry. But no, yes, long term it's not really harmful. Long term, if you comply, it's actually good for the industry. That's my point.
I would like to elaborate on that. I think that I totally agree with my colleague, but I wanted to say that yes, we can see the additional barriers for the, let's say, newcomers, for the startups. It's more complicated because basically you need to have the proper structure, governance, compliance procedures, responsible persons. You need to invest in the good labor as well. So it's like becoming more complicated for the newcomers, and sometimes it's all about the money. They are not able to enter that particular market because of this financial barrier and professional barrier. They do not have enough resources to comply with the new upcoming rules. But in general, if we are taking once again this consumer protection as a basis for the market participants who are already operating on the market, the transparency, the existence of the rules is really important. And if you are, for example, one of the biggest European, payment processing companies or, crypto exchange, you will be really lucky if you can comply with one rule within the European Union and you are done. So there are good and bad aspects of this, but we are not talking about over-regulation. This is like a regulation according to the needs of the market, but sometimes there are complicated rules to comply for the startups who are not having maybe enough resources to do it, from the financial and labor perspective.
Merit. Over-regulation or not enough regulation?
Yeah, I have seen, let's say that. So I have experience while I have seen over-regulation where even actually you may be compliant. You have applied for the license. However, the license process has been a long time, and actually. Everything has been maybe in order, or people behind that company has been very good reputation, good background and so on, but still there is actually the problem has been, especially in Estonia, technical side. So you don't get the license when your systems are not in place. So this is what I have seen. It's all behind the systems.
Yeah, I would like to add that we need to still remember that, of course, we can have the fundamental regulation on the EU level, but from the practice, for example, we have PSD2, the regulation for the payment institutions. Approach of the particular country, of the particular regulation is still different. So even if we have directive or regulation, it can be implemented different. If we are talking about the directive, there is a lot of room for the variety, let's say it like this. If it is regulation, it should be implemented as it is in the particular country, but still approach of the regulator like what is most important, how I'm doing the fit and proper interview with the founders, how I'm like checking in reality like the security aspect of the platform. They are different, and market participants should remember this while they are making the decision to be regulated in the particular country, and choose the country of the origin, let's say like this. And sometimes there are like question on the conferences, which kind of jurisdiction is suitable for the particular business model, blah, blah, blah. Actually, it's important to answer to this question. You always need to take into account where are your customers, where are your investors, what are you actually serving, if it is fitting your business model. But in addition to this, in addition to the particular regulation in your field, you need to remember very simple things as tax system, court system, the level of the professional labor, if you need to hire the people, etc., etc.
Local banking as well,
local
because
banking,
that's the biggest burden usually.
Yeah, absolutely. So entrepreneurs are sometimes like forgetting about those simple, basic things that are still existing while you're making such important strategic decisions.
Exactly, and tax systems in European Union, I can just talk about that, they're not going to become part of a acquis communautaire or a common law for a long time, because taxation, the fiscal policy is the milestone of sovereignty of every country. We gave monetary sovereignty to the European Central Bank, well, the countries that have euro, like Slovenia, but we're not giving away the fiscal sovereignty. So the taxation will remain competitive from country to country. Ireland, Luxembourg, and Netherlands will always be more competitive than Slovenia, I'm sure about that, taxation-wise. However, you touched on an important point, country of origin principle. So we judge by the regulation and legislation of the country where the company is based. For example, Malta. Malta has very favorable country of origin position. Their legislation is favorable to the companies that are registered in Malta, and of course they can offer services around European Union. There's all sorts of legal cases about that. But the country of origin works only when you have national legislation or you have directives, because directives can be implemented differently, a little bit differently in various member states. And European Commission eventually, that was a few years ago, figured out, countries like Malta and Ireland and Luxembourg, they have a more favorable position on the common market because of the country of origin principle and the directives. So what should we do? We cannot, go to Malta and say, well, guys, don't do that anymore. But we can use one of the European Union's basic tool, which is regulation. So regulation is implemented equally in all 27 member states. Not only 27, also the EEA area. So a lot of them also are implementing in Switzerland, Norway, and other EEA members. So now the country of origin is not so important anymore, because the same regulation in Slovenia and Malta will be implemented similarly. So why now migrate to another jurisdiction if, eventually most of the regulation, but taxation, which is national sovereignty, will be unified in the digital world, unified through regulation. So this will change business models for companies and countries that are now using their favorable position because of the country of origin principle. I'm not talking tomorrow, I'm not talking in 3, 4, 5 years, I'm talking in a decade, the European digital decade. Ursula von der Leyen, first week in her office, 5 years ago, European digital decade. 10 years, but in 10 years, it will be pretty much unified. So I'm not gonna fly from Ljubljana to Dublin necessarily to do business there because it's more favorable, but I will have probably very equal chances at home, okay? So this will change business models. That's why I'm talking about this DSA, DMA so much, because it's unifying the playing field, which will change your business models in this decade.
How about all those countries who don't play ball? Because now we still see all of those micro-states and little islands who are twisting and turning regulation for their own favor. Or we can just look at, for example, a very recent loophole in Canada. I'm dealing with fintech companies. There is a lot of financial regulation, and there was a massive loophole in the system whereby Canada did not pay enough attention for one of their licenses, which is a money service business license. So anywhere could incorporate the company, get a so-called money service business license for about $1,000 Canadian and a couple of phone calls. You did not need a local director. You did not need to do any kind of local submissions. Therefore, you didn't even need to pay tax because there was no submission requirement. So every scammer under the sun went to Canada, opened a Canadian MSB, and started to run their own bank. And because it looked good on paper, we are regulated by Canada, there were random bank-looking institutions opened up. Now, unfortunately, quite recently turned out that around 30 of them is supporting various terror organizations, so Canada is obviously paying a bit more attention on that, so this good time comes to an end. For all the scammers, obviously it's getting harder and harder to be a criminal nowadays. But what I'm trying to say here is that although one part of the world is still trying to regulate and harmonize and put everything under the same regulatory framework to make people believe that you don't need to leave the country or even the area to do business somewhere else, in the other way, there are always going to be countries willingly, and I'm looking for the banana republics with their beneficial tax regime, which is still, the tax havens, or unwillingly, and I'm looking at Canada, who just simply made a mistake and people exploited it very badly, is actually offering an opportunity for businesses to, forget all about the regulation, forget all about that trouble, come to my country, just hire my people. You don't even need to tax here. What do you think about that?
I will say, there is always different demand and different supply. This is the basic of economics, and this is how our world is interacting with the humans. There is always the founders or the companies who are looking for the easiest way. There are always the companies from the scratch, the founders, they're saying, no, we would like to play according to the rules, we would like to sleep well, we would like to have the clearance that we are protected under the particular country regulation, and if something is wrong, we would like to protect our rights in the competent court. So it really depends. I can give you a good sample. This is a funny story. It's coming from the virtual assets aspect, and it's not for blaming them, but I think it's very good sample for the particular question. So I had a call with a client. Founders, 3 guys, one from Malta, one from Greece, and one from France, saying we have the technology company providing the services for the data analytic for the trading with the virtual assets. Okay, technology company, clear. But we had a problem after operating 6 months with the funding, and we decided to issue our token to get additional funding. Okay, starting to be interesting. What have you done, guys? Oh, we decided that we will issue the token with the promise of the return. So basically, security. And now we raised 2.5 million, and we're thinking how we can get this money to our bank account because we are having ongoing invoices to pay. I'm like, okay, this is a problem because actually this is already performed situation, and the question was how we can make it legal. But the answer, unfortunately, it is already illegal, and you guys can go for the 15 years to the jail because you're issuing the security without any kind of legal entity, without the prospectus, without the license. You're not fulfilling any kind of regulation that's applicable in the European Union, and you are sitting in Greece, Malta, and France. So I think that you are having a lot of problems. And the question was, but where we can do it? How we can make it official, legal, so we do not have the problem? And the answer is, you cannot make it, but they are still looking for the opportunity. But what about the Panama? What about the Cayman Islands? What about, I don't know, in island of the middle of somewhere? Such things are happening, and there is always companies who are looking for such solutions. And then I believe there is always advisors for such solutions. But there are also other companies who would like to have the clarity about the rights, clarity about their possibilities, clarity about the regulatory requirements, tax requirements, etc. And those market participants are really happy if they have this clearance, if they have the good communications with the regulators, and if they can be sure that next day will arrive and they will not going to have the supervision or criminal proceeding on behind the door. Thank you.
Come on, guys, I could see that you even made some notes.
No, I'm just going to go back to DSA, DMA and DSA, especially DSA here. There's always going to be offline banana republics.
Yeah.
Offline banana republics. I mean, you can travel there and you can have all your money there in a safe deposit or whatever you do, your transactions. That's offline banana republics. But it's going to be harder and harder for the online banana republics. I'll explain why. Because DSA now says, well, we can't really target a digital company from an online banana republic. But who can we harm, which is the backbone of the digital atmosphere, is the platforms. First of all, the very large online platforms, Google, Instagram, the big guys. And then you have 4 layers of online platforms which have to be compliant. Even the smallest online platforms in European Union, which includes all the online gaming platforms in the European Union, since 17th of February, all of you, since 17th of February, must be compliant with the DSA and must have proper codes of conduct, must have proper moderation of contact, must remove something that you're notified by a trusted flagger or by government institution that's illegal content, you must immediately remove it. And if a platform, let's say a very large online platform or a large online platform, will be allowing the online banana republic companies to be present in their stratosphere, they'll be hit with up to, I think it's 6% of annual, can you imagine that? I mean, Google, which is Alphabet, and Meta are already under GDPR paying a few billion euros each year in penalties because of GDPR breaches, few billion. Under DSA and DMA, they'll be paying I would say up to $10 billion if they're hit, not because of a gaming problem, but because of some other misinformation or fake news or content problems. Now we are in the super election year in Europe. Now most of the countries you come from, besides European elections in June, have some sort of national elections this year. It's a super election year in Europe. And can you imagine the amount of fake news, disinformation, all sorts of things that are happening in the web stratosphere now? And DSA is the tool that gives Commission and national regulators the power to remove this content. You know, Elon Musk in his X platform, the former Twitter, he's fighting against DSA as much as he can. Thierry Breton, the outgoing European Commissioner for Digital Agenda, texted on his X on Twitter, said, you can run, but you cannot hide Elon. And there was an American journalist called Tucker Carlson. He was too radical even for Fox News. But anyway, so he had an interview with the current Russian president. And of course, that interview could not be aired anywhere in Europe or European Union under DSA and other laws. But Elon Musk said, no, I'm going to allow this interview to be aired on X, because X is an American company. You cannot get me, you know. And European Commission said, no, X will be a very large online platform. Mr. Tusk, you already paid $44 billion to purchase Twitter and rename it X. And now we're going to hit you with $4 billion if you continue doing things like that, allowing an interview with the Russian president to be broadcasted in European Union. We can debate about whether that's infringement of the freedom of speech. I'm a freedom of speech lawyer originally. I have a lot of doubts about the freedom of speech problems, but I'm just trying to picture to you the implications this will have in all sorts of activities and communications in European Union, including the gaming industry.
Actually, I would like to a little bit develop, well, not develop, but comment from my side as internal procedures. So you just mentioned DSA. According to DSA, some products which are not allowed to sell online platforms should be banned. But what I see is that there are also products which could be sold, but it should be like, documented internally. How we find out whether these products, can we sell these, or like, can we, I don't know, even promote, or can we advertise it? So I would say it's also internal procedures, meaning important to write documents.
Super important. Listen to this, that know your customer is one of the most important parts of the new regulation of DSA, Know Your Customer. We have the Know Your Customer in gaming for a long time, but it was based on national Know Your Customer regulations, maybe a few other international treaties, but it was national. Know Your Customer now is a pan-European regulation, not only for gaming. It goes, for example, the greatest way, example would be online marketplaces, like Amazon. And Amazon is already pretty much compliant. They have Know Your Customer if you want to buy a bicycle on Amazon or a ring. It's probably been checked. While Chinese and some other online marketplaces don't really check, who is their supplier, who's their customer. So you order all these nice little plastic things for no money, like, these little belts for our smartwatches or whatever. Then you get something completely different. Now, under DSA, this is not going to be okay anymore because the Know Your Customer Institute is really strengthened now, and that's going to have a big implication also, I say, on it's a horizontal act on vertical industries like the gaming industry.
I would like to comment also that Know Your Customer regarding online marketplace, I like to say know your supplier. Because when it's like business to business, it's also know your supplier, and also Amazon, they're also providing their services to businesses. And it comes also relation to ESG, like child labor, like it's not allowed to use, like whether we do we accept supplier who is using child labor and so on. So it's all related with this act, I guess, as well.
And if we are talking about like financial market, we have, in addition to KYC, Know Your Customer principle, we have KYB, as Merit was mentioning. But in addition to this, there is an obligation, Know Your Transaction, KYC principle, when you need to use very technical tools to actually have the clean understanding how the money is flowing, so the flow of the funds. You need to understand the previous background of the particular transaction. You really need to dive into those schemes, how the funds were like passing several wallets or several bank accounts, and this is like it is like technical aspect which is directly related with the AML obligations, and we are seeing that, for example, crypto industry which are implementing KYT principles in their business model, they are suffering because they are sometimes in the companies, they do not have enough understanding from the professional expertise point of view how to analyze this data, because one point is to use this very high level technical solution, and another one is to make the analytic and the final decision based on them. And for example, we just had a case with once again, virtual asset service provider, and they have everything in place. They have a very good written policies, procedures, how to analyze the transaction. They have one of the more expensive transaction analytic or transaction monitoring system, but they, on the level of the expertise of the compliance team, they are not understanding in which particular situation they need to take this particular measures. So there is lack of understanding of those procedures which were written by the very smart lawyers, but they cannot implement them in practice. And even this software is not helping them to find sometimes the answers. So I would like to highlight that once again, like expertise within the company or outsourced expertise is really important. Even if you have the proper regulation, if you have the proper procedures within the company, you have the proper technology solutions, it might be not enough.
Completely agree, and what I also see that the responsibilities are very blurred, because when you said, let's say, a marketplace, that's one thing. Good morning. So it is very blurry who is taking the responsibility for the action, because obviously there is one which is obviously on the company who knows who is your customer. So let's stay for example, an iGaming gambling company. You're collecting all the information from your clients, you keep it on file, you do everything in your best effort to know who is your customer, where the deposit comes from and whatnot. Now on top of that, there is an extra layer who is also doing that, which is the financial institution, institution or a bank who is accepting the funds coming from that customer. So now we are talking about a double layer of compliance check, which is not only adds to the cost and the time and the difficulties, but also could be varying in terms of responsibility based on who is regulating this kind of financial institution. So, for example, a European financial institution is asking different set of documents than you would as an offshore regulated online casino, for example. Now, on top of that, if we are even talking about digital asset providers or any kind of wallet or any other cryptocurrency exchange, this also is regulated under a different set of license, which is the virtual asset service provider or a European or a non-European or a custodial wallet or whatnot. So then that is also checking the documentation, keeping the same documents under a different regulation, asking for another set of documents. So right now, it is very blurry, and if something happens and it turns out that that transaction from that customer indeed was illegit, who is taking the responsibility? Because then everybody's pointing fingers on each other.
Actually, from the regulatory point of view, it's very easy for the regulators. If you are holding the license and you are providing the services, you are obligated entities. You can rely on the outsourced partners. You can say that this falls on our processing company, I don't know, outsource compliance, outsource monitoring, whatever, but you are reliable for this. The point that you mentioned is really important, because what we can see in the practice, as you said, there is a different regulatory requirements on the national level and on the level of the, let's say, business activity, because what we have in practice, for example, we have iGaming company who is using processing services for the fiat, who is using processing services for the crypto payments, and they are relying on the data information collected for the verification, etc., etc. So they have a lot of partners. That's why it is important to establish the rules within the company, procedures, governance arrangements, outsourcing policy, which are staying exactly the obligations of the particular partner, and they should be stated also in the agreements with the particular partners. But you need to remember that finally you are liable for whatever activity that you perform according to your license or authorization.
All right. Is it yeah?
Yeah, I would like to comment from data analyzing side, what you just mentioned earlier, Anna. That also regarding collecting data, regarding KYC, for example, the data might be totally different. Like, for example, gambling, gambling data, AML data, like what is your occupation, date of birth, residency, gambling data, won amounts, or user ID and so on. So technical data, IP address, and so on. So it's also important to understand that also, like Anna also mentioned, that it should be documented both ways, on agreement side, because there are third-party service providers, which platforms you use, also internally. But from this data, what I have seen, that companies do not know how to use the data. Collected data, because we can actually, one data is static data, another data is dynamic, but how we use this collected dynamic data, that's very interesting to think about.
Many times we see it in the bank or a financial institution. Send me your utility bill. Why? Because we need it. But what are you going to do with that? We keep it on file, and that's
exactly
the whole purpose, right? Because obviously you can't check if it's valid or if it's legit or someone typed over the numbers. Unfortunately, time flies when you have fun, so we only have 5 minutes left. So I would like to ask my panelists to summarize in a couple of sentences, what do you think, what's the future, and how you personally can add to this?
In the field of digital regulation, I think there's going to be a lot of analogy with GDPR. You have the responsibility of controllers and then the processors, and the controller is the one who's usually, responsible for the processors as well. But there's another thing in the future that I would like to warn about or raise. Is, I started working in the gaming, or for the gaming industry as my clients in the good old offline brick and mortar times. It was really easy. You had a brick and mortar casino. And then you had one national gaming authority, you know, handling the licenses. You were compliant. Bam! You build a casino on the Slovenian-Italian border. Italians come, they gamble. Everybody's happy. In the online world, there's not going to be one regulator anymore, and that I stressed this yesterday. Okay, it's the gaming authorities that are the gaming regulators. But everybody doing gaming business online will have additional regulators, which are defined by the DMA, DSA, AI Act, Data Act, Data Governance Act. Those are all sorts of acts that are now being implemented, and you will have to actually seek compliance and sometimes even licenses from different regulators than we were used to up to now. Even though we've been in the online world for quite some time, but still this is a game changer now with this multiplication of applicable regulators in Brussels and on a national level. So I think this is something we need to think about in the next 5 years.
I would like to summarize that from money laundering or anti-money laundering, counter-terrorist financing perspective. It is important to evaluate before you implement new technology, new product, new service. It's important to evaluate it in prior. Also make a risk assessment, whether is it according to your business, and also mitigate risks sufficient level. And also when we implement new technology or new services, products into our business, which means like into compliance, write down new procedures, it's very crucial to conduct the training as well, so that every level of employee actually understand, especially IT, when it's involved with the new technology. So I will summarize like that.
Yeah, and I would like to add from my point of view, like we will see different new business models and new financial products in the future, and regulation will coming behind it. As we have seen, for example, the crowdfunding is not something new, but regulation came in force last year in November. So, and virtual currencies, we are having the MiCA now, but we have the large companies with the turnover similar to the banks already. So we are actually, as lawyers, giving an advice, especially for the fintech clients, sometimes in the situation when we do not have yet enough court cases, regulation, practice, and we need to think innovatively. And I would like to highlight or give some advice for the founders. Like, you need to mitigate the risks, but you need to keep the following 3 things always in mind. You need to find the balance between the company needs and, let's say, regulatory requirements, because sometimes there is space for the decision, internal decision of the company. And as Merit says, you need to make your risk assessment, risk appetite to understand, okay, this is my barrier and I can now go over there, or I can accept this risk, but I'm not okay with this. So this is really important, like evaluate and do the risk assessment of your particular business model. And you need to update this all the time. So as there is upcoming changes, you're entering the new market, you're having the new products, you need to update this. The second point is that you need to really invest in your employees and their expertise. This is really important. And the third is, please try to be some steps ahead from your competitors by knowing your obligations according to the law. Like, if you understand that, okay, this will happen and I need to comply with this after 6 months, after 3 years, you can be more prepared. You can start the preparation in advance. You maybe need to change the structure, change the product, etc. And this is the situation when you better know in advance what is upcoming, to be prepared and to provide the services and products that will be competitive.
Well, thank you very much for everyone. As you can see that we can talk about this subject for years and years if you don't shut us up. So please do take advantage of the knowledge of my colleagues and do find them over a cup of coffee, discuss your existing or future problem, bounce some ideas. I'm sure that I'm talking from everyone's heart when I say that. Please do shoot us with all your questions. And again, thank you very much, Zoltán. Thank you very much for everyone who was listening to us, and back to you.
Thank you.